Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to the Wednesday morning edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had an amazing trading day yesterday as we begin on the 6th of March, 2019. For those of you new to the channel, do me a favor, click that subscribe button down below, hit the notification bell so you get updates as they come available. So let's dive right in. Not a whole lot to cover today, as we are still kind of in between some major levels of both demand and supply. We had a pretty strong, sell-off. Well, not super strong, but a little bit of a sell-off yesterday towards the end of the day, and but did not come to our levels. Right, didn't come into our very strong levels of either demand or supply, and we sold off a little bit, but not enough for us to really enter into a position. And what we're really seeing now on this 4-hour time period, that continual slowing of momentum. Right, our momentum is still kind of continuing to be weakened, and definitely showing some weakness. This one big red candle would be called price shock. Price shock is when you have big candles the opposite direction of your predominant trend, and price shock is definitely something to be concerned with. Right, when we look at a chart and we look at price shock, it is something for us to be aware of. And overall, when I look at, for example, taking a look at the VIX, and I don't typically use the VIX all that often, but looking at the VIX, we can see that over the last couple of days, as the market has been chopping sideways, we've got a little bit of a rise in the VIX. Not a huge one, but something to at least consider, concern ourselves with for the most part. Now, interestingly enough, if you are in something like the SPY, let me throw a study on here. This is our Traders Army implied volatility study. We're in the lower 20% of our implied volatility range, which, at this point means that we're low enough to simply buy a call or buy a put. That's when we do in the lower volatility ranges. So with the market kind of chopping along, right, and a whole lot of sideways price action here over the last couple of days, there's nothing wrong. We are actually in a, kind of a right in a little daily supply area. There's nothing wrong if you've got some other bullish positions to look at a potential, maybe even a put option as a hedge, on your bigger picture positions. Just with the market kind of giving us that slowing of momentum, I'm not willing to be bearish at this point because the market has not told me to be bearish. However, I will consider a put as a way to kind of look at it. Even better, maybe it's an opportunity to look at options on futures, right? So options on futures. I've had a lot of people ask me recently about trading options on futures and utilizing maybe options on futures as a way to speculate. A little bit more time involved on the speculation of these options on futures, but there's a lot of liquidity, a lot of choices to pick from, when you dive into that. So if you want to learn more about options on futures, do me a favor, leave a comment down below. I may be able to put something together to talk a bit more about it. I've had a few people ask me about it recently, so I thought I would at least touch on it here today. All right, so let's take a look over at the NQ. The NQ, also between our levels, we still have a confirmation supply up here as a potential for a reversal. Remember, that was on a 15-minute chart. It was a confirmation level because it wasn't the greatest of areas, and then we almost came close to it yesterday, but not enough reason for me to necessarily jump in unabashedly on a potential short trade. I'll still leave it in play, something that may come into action today. In crude oil, so in crude, we came really close to our entry, and boy, is that frustrating. Let me know in the comment section below if you did happen to jump into that thing a bit early, although it did not meet the criteria for entry, so we will still leave this area here. However, because we've come so close to it, I typically will revert those to confirmation style entries when we come that close. This one's not quite there that I have to worry too much about it, but I will convert it to a confirmation style. And remembering the reason we took that area was this this really rally-based drop in here and that lower wick there to make it kind of a two levels kind of stacked together. It's a twofer, right? It's a twofer. So using that area in there. Now we've come back up to our 2 a.m. kind of breakdown area, and we'll see if we get a little reversal out of this. There's a potential, if you really want to give something a shot, of a short right in here. It's not super high probability, but I think we could get a little reversal off of this level in here. So I will put this one on. It's really at the close of market yesterday, so it's lower probability just due to the time of day, but it is one worth at least paying attention to and having on the chart. It's a very small level, 56.54 by 56.63. Let's see if we make it up into that one today for some sort of a reversal. And in the gold market, so in the gold markets, we got a little bit of a breakdown down here. We've not really come below there as of yet. We got quite literally, what is that? Our line is at 1282. We didn't even get a full point below, so you may or may not have gotten in. If you did get in, we then came right back up 1, 2, 3, 4, 5, 6. Not a whole lot. We didn't hit our prior pivot, so it's still just kind of chopping around. So it's a whole lot of nothing happening in this position. So still, I think a valid area that we could kind of fall down from. Next, bonds, Aussie, Euro, Canadian. So in the bond market, now in the bonds, we had a level yesterday that we anticipated a breakdown from. We got a little bit of a breakdown, and then it went nowhere, right? 1, 2, 3, 4, 5, 6. I use the 6 candle rule a lot because if it doesn't break down after that period, take a look, we came right back up into it. Now, this was a confirmation style where once we got halfway in, we went right through it. So now it's no longer going to be valid to me, right? Now, we are seeing a fair amount of strength in bonds, even though we're not seeing the same corresponding weakness in the equities market. So that is something to concern myself with. So for now, I'm not going to add anything new to the bonds other than our level that is up here. In the Aussie, those of you that took the Aussie breakdown, let me know in the comment section down below. If you took our breakdown in the Aussie, that is still running along nicely. We are just about to our target. So if you got the target, you're down here at 70.19. We have a little confirmation long entry in here. But remember that our big picture is now firmly, entrenched to the downside, which is why this confirmation is a bit weaker of an entry. So just be aware of that heading into that region. In the euro, this is frustrating. Came super close to our euro entry, did not get filled. Have to switch this now to a confirmation style because of that almost touch level. I'm not dead on the level, but I will wrap some lines around it and just kind of put it in play here. I'm also going to look at this area up here for a potential on a reversal if we do pop up here early in the day. Canadian dollar, we came back, gave a little touch and go off the level we identified yesterday, and have continued to move down. We're now down into the confirmation style long area. So you could theoretically take that long, knowing once again we are firmly entrenched in that downward move has kind of happened and it's here, so slightly lower probability. And if you do take the long, you've got limited profit potential. I don't think it's worth taking at this point simply because my profit potential is a bit more limited. I do think there's another opportunity to get short if price comes back up into a decent little supply level. Great British Pound and Japanese Yen is another example of a level that we identified. Now this one, we did get a little touch and go off of that level, but we've not really done a whole lot of movement since then. So if you decided to close this thing out, I think that's not a bad plan, not a bad idea. Lock in some profits, move your stop to break even, because it doesn't look like we're getting a huge reaction off of this level. So nice little profit for that one. Let us know in the comment section below if you're able to catch up on that one. Japanese yen still in between some levels. We talked yesterday about a potential breakdown below this area here. We got, and we're still kind of chopping sideways. So, this looks a little bit like gold, right? In that we got a little bit of a touchdown and it's chopping around, but could still continue its move to the downside. copper after our rally up off of our demand level. A couple of you guys grabbed that for a little bit of a profit. We've got some supply up above us in here. And then nat gas. So nat gas, I talked yesterday about how this level's getting weaker. We still haven't really traded deep enough into it for an entry as of yet. And now we're basing below it, right? So I will remove this level. It's no longer going to be one that I am interested in looking at. So hope you guys have an absolute great trading day today. If you've got any questions, please send me an email, support@tradersarmy.com. I will talk to you all soon.